The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All righty, folks, come on back here to the Diagnostic Trading Hour right here on TFNN. Don't forget you can check us out on Tiger TV at TFNN.com or live inside the e-signal platform. Also, you can listen to us on your mobile phone anywhere at TFNN.mobi. Let's check out where the indices are at right now. Pretty quiet this morning. We got the S&P is down 2.5 points. We have the Russell down 9. NASDAQ currently down 2.5, and copper is down 19. Dow is down 19. I think my glasses cleaned up there. We got copper right now, pretty flat on the day, just up 0.5%. We got gold doing the same thing. We got silver down just barely anything, so pretty flat on the day. Natural gas is currently down 0.5%. We have oil down 37 cents. We got corn up 4 points, and soybeans is moving as well. It's up 21 points, about 2% on the day. Looking on over at our foreign exchange, we got the pound dollar is up 10 pips. The euro dollar is up 9. Euro pound is up 1. Dollar CAD is down 1. Dollar franc is down 8. U.S. yen is currently flat on the day. Pound yen is up 11. Euro yen is up 8. With the Aussie yen currently up 8 pips on the day. All right, so that catches us up right there on your mid-market wrap. Let's go ahead, midday market wrap. Let's check out where the news is going to be this week and what we can do to take advantage of it. So I'm going to pull it up, look at Forex Factory here. Just a simple calendar. There's a lot of different ones out there. It's one of many. And it just lists off a whole lot of the different areas there. And rolling on in, I'm going to start pulling up the different instruments, and we'll see what all we have. Well, this morning, the only thing we really had was the pending home sales. And let me pull up something for you there. And we'll pull up that chart as well and look over it, see if there's much to it on the release. And we talked about last week on that one. Let's see. Let me pull one more thing, and then I'll get the chart over here, and we'll analyze the report. Okay? All right. So, let me go up and open the euro dollar. I'll get a new chart on here, and we'll walk through how you could have potentially traded. That I know Nadex is doing a lot of updates on their platform, so hopefully those will get done soon. They're basically upgrading their tickets and a lot of other cool features. So, just sort of sitting back and waiting for that to get knocked out. All right, let's go over, and we'll just pull up momentum. Actually, instead of doing momentum, why don't we'll pull up magnets. There we go. And today we'll focus mainly on just getting the news knocked out. Okay, so let's see, make sure chart's updating live. Okay, we're good to go. All right. Now what we got over here is our report that we had was for a $30 minimum take profit, entering at a 9, 4, and 11 o'clock. And so if we go over and we go to 9 o'clock, take that to 11 o'clock, got 3 pips. So I don't really care, I think, what you got in at. If you got in at anything, trade should have worked out. And, I mean, you could have done a little less than 30, but really 30 was the ideal minimum take profit. And let's see, let's go in and see what we have for the rest of the week. But that was it. It's just really quiet. I mean, just nothing's happening this morning. And but we do have a pretty big news week ahead of us. So that is coming in. We got some of the big reports. So let me do a quick walkthrough with you, and then we'll come on back. Tuesday, let's see, was there anything else for Monday? You got new home sales month over month. I talked about this last week, so make sure you get it on your calendar. We went over a couple days. We got various yen releases. I talked about that, the household spending, the unemployment rate, and even some retail sales. So all of that's coming out. Also with the Aussie report, you want to be aware of that one. And let me pull up the time so you can know when to just have your alerts ready, and what's the usual time it comes out. Keep hitting the wrong button there. There we go. All right. So looking on over, we got 9 o'clock. We have 8:30, 8 o'clock, 7:59. So I'm basically looking at 7:30 to 9:30 just to give you a window. Somewhere between 7:30 and 9:30, the HIA new home sales report should be coming out. It's not a forecasted number, so it's not really a news tradable event, but it is an event you should wear. This could cause a little volatility. It could come out any time between 7:30 and 9:30 tonight. So let's see here. Okay, but 7:30 to 9:30 tonight for the HIA new home sales month over month. Just put this in my report. Be aware. Okay. Let's see. Okay. So we got Monday. That's it. I mean, that's really all there is on Monday. Pretty small thing. Just be aware of the yen events. Be aware of the Aussie events. We had the pending home come out this morning. Let's scroll on over. Let's check out the 29th and see what we got on here. Not a whole lot out of the gate. The one thing we have is we have consumer confidence coming out. Not usually just a major mover, but maybe something we can take advantage of. So I'm going to pull up and do a little news analysis here. That's going to be released at 10 o'clock. So we'll be looking at two potential trades. There's not a lot going on either. So for the entire day as far as news goes. So I'm also going to back out a little bit and see what we might be able to pull off even to end of day if needed. So first I'm going to check out the 9 a.m. entry to the 11 o'clock expiration on the euro dollar for the consumer confidence report. And, all right, we got 20 pips, another 20. We have 11, 6, so 8. And then going on down, we got 10. One big one there at 33. Got another one at 35. Those are pretty big deviations, by the way, on those reports. Then we're back down to 5, 3, 8. Okay, so looking down all of them, we had 2 that moved about 30, but the rest of them stayed, most of them right around 10 pips or so. So I'm going to say we're going to do a 20 pip. That means we may have a couple losses throughout the year, but if we go for 30 on this one, I don't think we're going to get any fills. So we have a 9 a.m. to 11 a.m. entry with a good probability over the course of 12 releases. And we want to do a $20 minimum take, $20 minimum profit iron condor. That's buying the lower spread and selling the upper spread. Now, what about 3 o'clock? Is that a good or bad idea? So we got 15 pips. We have 2, 7. Let's see, 44. Wow, that's a pretty big move. We got 13. We have 8, 10. We got a 49, 25, a 12, a 10, and a 5. So basically we have the same stats. We are going to have to widen out that number to make sure the stats work out for us. I'd say we're going to have to look at a 30 pip minimum entry iron condor, give you a 1-to-1, get out if it moves up 30 pips above your bought price or 30 pips below your sold price there. But let's go in and actually even a little bit more than that. But it's the total risk plus the profit on the other side. It's how far it can move against you. Anyway, so with that in mind, let's do 30 pips. So you can get in as early as 7 a.m., and you can go to as late as 3 o'clock. So basically 7 a.m. to 3 o'clock. You can enter as late as 9 o'clock. So between 7 a.m. and 9 a.m. enter for a 30 pip minimum profit. Iron Condor, that's buying the lower spread, selling the upper spread over on the Nadex exchange in Chicago there, and for the 3 p.m. expiration. And that really looks like it might be our only news trade for the day. You could put a be aware. I wouldn't even worry about any of the pound stuff there. The yen, 750, might get a little bit of a pop for maybe 20 ticks or 10 ticks. Shouldn't be anything major, but could be good for certain kind of spike trades and things like that. But momentum scalps. But about 7:50 p.m., we have the preliminary industrial production month-over-month report coming out of Japan. So look for any kind of move on any kind of yen pairs. U.S. yen, pound yen, Aussie yen, euro yen. So that'll give you a few different things to watch for that. But, shouldn't be a major market changer, but could cause a little bit of volatility that you might be able to take advantage of if you're ready for it. And just don't be caught off guard, have a tight stop right when that release comes out, because it could pop and then, go back the other way on you. And you just want to be aware and ready for the news. Going into Wednesday, things are going to pick up a whole lot more. This is where the volume really starts coming into the market. We might see some quiet markets today, obviously, and tomorrow, waiting on all this stuff to come out. We got FOMC statement, Fed funds rate. We do not have, this is important, we do not have the press release on the Fed funds. It's usually not as impactful when we don't have that, okay? We got ADP non-farm payroll coming out. We got advanced GDP coming out. So a lot happening on Wednesday. That's going to take up a good time. We're going to have to go through each piece of that. And let me see. Looking at Wednesday, our main 2 reports we're going to be trading, but first I want to we'll get the be awares out of the way. There's a lot of European events just coming out. This is all day on that. That makes no sense. But basically, there's various releases coming out between 2, and let's see when the Italian bond auction comes out as well. That might be our last release. I just want to get a little idea there. And they say tentative. I just look at the last releases. We got 520, 520, 520, 620. Okay, probably time zone change there. So just various releases coming out really between like 3 and 6:30. Okay, and so have that on your schedule just to be aware of some Euro news happening. They're literally just, it's Italy, it's Spain, it's Germany. So just all sorts of stuff coming out throughout the early morning hours on Wednesday. Nothing that's major, nothing that we're going to trade specifically. You just like to know when it's happening. Then I'll watch over like on Financial Juice. They give a live feed that comes in from a whole lot of different news sources. It's a good place just to sort of see what happened without having to overanalyze the trade, because you want your eyes really on the charts. You just want to be aware of when certain events are coming. Stay right there. We'll be back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. Let's see. All right, so we're going through and checking some things out. And let's see what we got right now. Pull this up and get back on track. Okay. So the first thing we're going to is we'll get ADP and Fed funds rate. We'll come back to that GDP right there. I'm going to even pull that up. Let me just get the engine pulling that information for us real quick in the background. And first I'll pull up the ADP employment change. Then while the engine's collecting the stats for me, we'll go through and look at the rest of them. Okay, so first things first. I'm just trying to... Takes a second for all this technology to catch up. Okay. All right, so what we're going to look at right here is the ADP NFP, not the NFP that happens on the Friday, but the ADP NFP report. And looking at it, what do we got? Okay. Looking at Euro-Dollar, with the release at 8 o'clock, we got an expiration of 10. Okay, that's usually not the highest impact report. We got like 1, 2 ticks. Okay, then we got 16, 14... 21, 5. Let's see here. Right at 10 o'clock, we have 38, so that was a big one. 14. Let's see, 34, 8. And 30. And then we had one massive one that was like at 70 pips. Wow, okay. That was not really totally NFP related, but because it popped up and came on back down. Let me look over at the 3 o'clock, so I want to see if I find anything better. And what we got here is we have 1, 28, 26, 30, 8, 13, 1, 33. And then we have a few big ones in a row. That was when all that stuff was going on last year. So it really is unique events. It does help, obviously, as you have the market experience. You know what was happening. It wasn't just a number, but it was some other things happening along with it. It's going to be a tough one because we're also going to have that advanced GDP coming out 15 minutes later. And then we're going to have FOMC coming out at 2. So just knowing that those are coming out, I really don't want to do a 3 o'clock trade. I think that would just be asking for it. Let me pull up and see what I got on the GDP with it. And I might look at a couple of different GDP reports to go with it. The quarterly GDP, let's see how consistent we are on it. It looks like on Eurodollar, what we got here is, for the last 2 years, only 54% of the time has it moved 50 pips. The average range, however, is 60 pips. So from high to low. And that 50 pip is a high to low average. So really not looking at it's pretty low, number. I'm trying to see if we got something that might work a little bit better. Looks like the highest, most volatile pair during that time is the pound dollar. Let me change up. I'm going to switch over from euro over to pound. And I want to see what I can get on this. Maybe I'll get a better trade. Or maybe it'll be same thing. Let's see. We got 3, 17, 33, 15. Let's see. What do we got here? We got 8, 37. And then we still got those last few reports that were pretty big. Like I said, those were rare circumstances due to the massive fundamental government clash. Everything was about employment for a while there. I'm actually going to flip over. We're going to go pound dollar on this report. And I'm going to do one more search with it. I'm going to go in and look at all the GDP releases on pound dollar. And let me pull those up. Once I get those up, then what we're going to be able to do is decide if, with the combination, because I got to look at the combination of ADP and of GDP to see if we can pull off this report. All right, stay right there. We'll be back right after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. And, okay, so looking at the pound dollar, and wanted to just look at how it's reacted on a bunch of these GDP reports. And over the last 12 months, what have we got before 10 o'clock? Because that's really what I want to see. And we've done pretty good about staying really within that 30 pip range or less. Even going pretty far back. So pound dollar has actually been a little bit better than the ADP and FP. So what we're going to do is we're going to go for, and I don't know exactly how this is going to work out, but we're going to go for a minimum. Based on the two combinations, I'd say instead of trying to go like really aggressive at 20, we're going to have to back out and we're going to have to stick to 30. Okay? So if we go with 20, I think we're just, it's not it could work out great, but I'd rather not have the trade, just have it not work out the way we want it to. So let's go more on the conservative side. Let's stick with 30 pips. Let's do a $30 minimum profit. So that's a profit from the bought spread on the lower side and a profit from the upper spread on the sold side. $30 minimum profit, Iron Condor. Enter at 8 to 10 a.m. on the pound dollar for Wednesday. And that's going to cover both the ADP NFP report at 8:15 and the advanced GDP at 8:30. And I would not be surprised to see it pop. It may even go up like 30, 35, 40, maybe even 50 pips like half the time, but pull on back before the 10 a.m. comes on around. Okay? So that's the whole advantage of the iron condors. They give you that really wide range. And let's say if you got 30 on, you had 15 on each side, that actually give about 45 pips up, 45 pips down for a 1-to-1 ratio there, and from where the market is at when you first get in. So let's go ahead and stick with that 30 pip range. That gives us right at that edge where it can sort of move out and come right back in. And it hasn't really moved out of that too much at all. So I think we have a solid trade. And a couple times I have seen this move to like 45, 50, and then pulled on back down to like 20, 25. And but a good chunk of the time you'd be surprised. I mean, it just pops up like 15 and right back down. So also another reason for seeing it potentially go flat is FOMC's coming out that day. And that obviously could be a little bit more volatile. And pre-FOMC, we usually see the market like pop and then pull back and then go flat right at FOMC. So that's another reason why I'm looking at taking it that way. Going into the Fed funds rate. Okay, so that's going to cover our ADP, NFP, and our advanced GDP, both, for the USD. Okay, so now let's go into our Fed funds rate. We'll pull that up. And there's a lot of different ways this can be traded. And let's see, what was the last release we had here? June 18th. What I want to do is I want to focus a little bit on the ones that did not have the press conferences. So let's open those up here over the past year. Okay. And we'll sort of scroll through those. Okay, see where it has economic projections and press conferences. Okay. And here we can shrink all this down. We'll see what did and didn't come out. And what we're going to do on this one is we're going to focus more on when it doesn't have the economic projections and press conferences, because that's what's happening on this upcoming release. So, pulling it on back, and let's see. I have all the way back to January of 2013. So we can actually pull up a little bit more data there. Got July, May, March, and January. Okay. And let me close all this out. And then I'm just going to walk through each one of these releases with you. We'll talk about, how they moved on end of day, and put the whole thing together. Okay, now this comes out later in the day. Okay, the report's going to come out at 2 o'clock. So it's like right at the end of my show on Wednesday. And we get the statement and the Fed funds rate. Sometimes we get the statement, the Fed funds rate, we have the economic projections that all come out at 2, and then at 2:30 the press conference kicks in. This is usually the more volatile announcements when all four of those things are happening. When we just have the rate and we just have the statement, unless there's some sort of big built-up pending surprise, okay, unless they rock the market by something they say, usually we won't have just a massive move on that. So let's go back and let's look at even how the reports have come out lately. And we'll just start right here. We got June 18th. We had all four, and it still was really a quiet mover off the 2 o'clock release. It was pretty much a big dud. And taking that on in and looking, to basically 3 o'clock for the release. I mean, it popped up about 27 pips, and it popped down 30 pips. So we had like 60 pips of movement, but it was up 30, down 30. Okay, or up 30, down 60, or whatever way it went. And so big moves. That was what can make it very, very difficult to trade the FOMC in both directions. But by the time it settled down, we had a net move of 11 pips. Okay? So on that trade right there, 11 pips, and that was with the reports. Now, if we go in and focus on this one right here, this is without, and that was on April 30th. It didn't move up and down as much. Moved up about 12, moved down about 7 from the release, and we had a net move of about 9 pips, almost no difference. And we go basically, as you're starting to see the pattern, every other. So right here on March, on that release, we had all four, and it was a big mover. It was like 73 pips, but that was with all four of the moves. Okay, all four of the announcements coming out. We go back, we check out the January 29th release, and we just had the 2. Just having the two releases, what do we have? We have a 6-pip net move. Popped up and down about 20 pips, positive 20, negative 20, but ended out about 6 pips different. Then we go into December. We had all 4 again. So again, that every other thing happening there. On that one, by 3 o'clock, we had a net move of about 30 pips. Okay, that's all 4 of them, about 30 pips. All right, so then we go into, we only have the 2 announcements, and that's back on October 30th of last year. The 2 announcements, we had a pretty big move. We had 35 pips on that one. So it moved on down, and that was October last year. Usually we aren't surprised to see some big moves in October, even September. September we had all 4, and that was when everybody expected a change in monetary policy and all this other stuff. We didn't get it, okay? They're like, no, we're just going to keep printing away. And the markets, it hinted at doing printing some stuff and doing some stuff, and there's all this. That was like 130 pips, all 4 announcements, but there was a lot of built up. You heard Fed everywhere in the news, okay? Looking on over at this one right here, we got just 2 releases back on July of last year, same time this last year. And we had a pretty decent move. We had about 40 pips. Again, it was a little hotter topic back then in 2013. But it actually popped up. Check this out, okay? This is what it did. It popped up. It went up 50 pips. It dropped back down, went negative 20. Okay, so positive 50 from the release, went negative 20 from the release, and popped back up almost to the exact same high. Went up to like 53 pips. Okay, so you actually had a chance if you're iron condoring to hop out of that trade when it popped back all the way up and all the way back down like that. Go over here. We're going to look at FOMC economic statements, Fed funds rate press conference. So all 4 happening again. They're in June. In June, with all 4, we had 120 pips. You're starting to see more and more how we're getting these big moves when all the stuff happens at once. And we look at how there's just 2 releases right here. Happening at 2 o'clock there. That's on May 1st of 2013. And we see a move of 5. Let's see, is it 5 exactly? 14. Okay, so 14 pips. So pretty small release. We go into March. And on March of 2013, we had a net move of 6 pips. That was with all 4 of them. And then January 30th of last year, with only 2 of the announcements, 2 out of the 4 without the press conference, without the economic projections. By 3 o'clock, we had a move of 3, 4, 5, 6 pips. 6 pips on that move. All right? So, one thing I wanted to hopefully you noticed is that there was like one time where it moved 40 pips when we only had 2 releases. Okay? We didn't have all 4. There was only a few times where we had big moves. It's when there was a lot of news about the Fed, a lot of theory going out. They're going to raise it. They're going to lower it. They're going to cut back. There was a whole lot of speculation going on. Okay, and they were causing a lot of volatility. The Fed itself was just causing a ton of volatility. And that's when we had those big 120, 140 pip moves. We didn't have any of those big moves, and not that we couldn't, but we didn't have any of those big moves when they didn't have the economic projections and when they didn't have the press conference. So what kind of conclusions, or theories or whatever can you come up with? Well, one is, we have 2 of the 4 announcements, therefore we don't expect as big of a move off of this FOMC release. There's not just a ton of buzz about the Fed. There's not just all this, everybody wondering exactly what's going to happen. It's not the talk of the town. Okay? Which less anticipation, usually less impact, unless there's some surprise statement. So, where does that leave me on this trade? Pretty much what that's going to put me in at is I have a lot of different ways I can trade it. But one of those ways that I will trade it is I will go in and I will look for an iron condor actually on Fed funds rate, not a straddle. And you might think one would lean towards a straddle on the Fed funds rate. But I'm not going to go towards a straddle on the Fed funds rate over here simply because it usually doesn't move that far. There's only been a couple times where now when it's exploded, it's exploded. But again, that's when all 4 came out. And so I'm going to look for ideally 40 to 50 pips. And you can do that both on, now that's the euro dollar stats I gave you. We can also do it on pound dollar. And I'll go through each one of those with you this week, tomorrow, Friday. We'll be talking about, or not tomorrow, but this today, tomorrow, and Wednesday, we'll be going over more and more aspects of the Fed funds rate and how you can take advantage of it. But let's see here. We got a whole lot of different reports we can do on it. And usually, let's see. Okay, so the average move, and I know some of these are even tighter than they need to be, but I really wouldn't expect the market to move more than 50 pips. But if it does move 50 and you get 25 on each side, that means it can move up quite a bit. It can actually move up. Let's say you get 25 on each side. It could basically move up 50 and need to be break even. Okay? Because you made 25 on one, you lost 25 on another. So it can do that whole distance for you to be break even. So the euro dollar is one of those that we could go in for. And what I'll do is I'll lay out the pound dollar for you, I'll lay out the dollar franc for you, the Aussie dollar for you, and the dollar CAD for you. All as iron condors. Now there's another set of iron condors, and it's been a little bit harder with the lower implied volatility to get these trades on. But you can even go in for pre-news on some of these and try to do some pre-news iron condors. And let's see here. What do we got? I'm trying to find some of them that would work out for us. And let's see. Okay. Most of them we're going to be looking at 11 a.m. for 3 p.m. Okay, that's going to be our trade on a lot of these. But we can even do some going into the news announcements. I'm trying to find where I laid out some of that stuff for us. And okay. So the best way to do it, first let's lay out our plan for euro dollar. Euro dollar, we're going to be going for 50 pips. Okay? So 50 pips is our euro dollar play. It's an iron condor. You can enter as early as 11 o'clock. Okay, so we're going to let that GDP stuff, and we're going to let ADP, NFP, we're going to all that sort of get out of the system. Okay? And look for an iron condor for 3 o'clock coming on out. Now, you could also enter as late as 1. So somewhere between 11 and 1 o'clock, and you're looking for about 50 pips on the trade. And we can do that on the euro dollar. We can also do that on the pound dollar. Let me pull up the exact stats for each currency pair for you. And I'm going to even do more research on this. We're going to go into it more and more each and every day this month, or for this release for today to this week. Let me get one more piece up. And okay, so with the release coming out here on the 30th, and their last release happened back on, let's see, what do we got, June 18th. Then what that's going to allow us to do is look at the following trades. Okay? We also may have some potential straddles and strangles, but we sort of take those live on air if they're going to pop up. But euro dollar and pound dollar we're both looking at about, even dollar franc, about 50 pips of minimum profit that we want on those. All right, stay there. We'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And all right, so tomorrow I'm going to have a whole layout for you, and we're going to go into 90 minutes before, 60 minutes before, and 30 minutes before to try to take advantage of that flat volatility. There may or may not be trades there, but if you know what they are, you know what the ranges are, you can know what to expect, and then we can, target those and potentially have some extra trades. And we'll actually be looking at 6 FX pairs when we do this. We're also going to analyze the 6 pairs for going into the news release up to 3 o'clock. And so you're going to have your hands full with plenty of trades to do on this. And again, we don't expect to get every one of them. We're just going to try to get some of them launched out. The 6 pairs we're going to be looking at are going to be the Aussie dollar, the euro dollar, the pound dollar, the dollar CAD, the dollar franc, and the dollar yen. And I want to keep adding to this until we actually get all 10 FX pairs covered. So we're going to build it up. Instead of just being 1 or 2 pairs, we're going to have all 6 pairs. And then we're going to add on, probably on the next release around, which will be, the bigger release anyway, because it'll have the economic projections and it'll have the press conference. We're going to add in the other 4 FX pairs, so we have all 10 possible FX pairs on Nadex for this trade. And from there, maybe we'll start doing some analysis and looking back on something, some of the other commodities. Problem is, a lot of the commodities closed down too quick. Like gold would be great, except for, the last intraday one expires at 1, the last daily expires at 1:30, and the weekly, well, that's not till Friday. So they're going to move too slow to really take advantage of a volatility collapse. I have done a couple of them on Wednesdays for Fridays, and they've worked out. But personally, I don't like waiting for several days to make what I can make in 30 minutes on something else. There's no profit advantage by waiting, and I've done just as well in the shorter-term ones as the longer-term ones. So, anyways, but we'll look at those, see what we can find. And we already got the one plan. So just so you have this one down, so you got this one to take away. On the FOMC, we got enter as early as 11, no later than 1 o'clock for the 3 o'clock expiration on the euro dollar for a $50 minimum profit. Iron Condor, buying the lower spread, selling the upper spread. Again, that's the 3 o'clock expiration. Okay? So we got that one down, but we'll add the other 5 FX pairs tomorrow. And we'll also add all the pre-releases tomorrow. So it'll be a big FOMC discussion day where we go into all those. That'll get us a little bit ahead, so we can start building up into the other releases that are coming out. Of course, also we have crude oil inventories coming out, and definitely start watching for spike strikers on those. And let's see, what else do we have? We'll have building approvals. Let me see what we're going to be covering this week for you. And we'll have building approvals, talking about that tomorrow. We'll want to make sure we get that one in, but if we don't get it until Wednesday, we'll be okay. It's just Wednesday, a lot of times we're tied up talking about FOMC, and it's better if we have that full plan, all the research done before the day comes up. But building approvals will definitely need to get knocked out. Then we're going to look at housing starts, Canadian GDP, jobless claims, PPI, and then we'll go into Friday. We're going to have manufacturing PMI, and we're going to have the NFP, employment change. And we might personal income and outlays are always going to be overpowered by employment change. ISM, again, can easily be overpowered, so may not be as big of a deal on Friday to focus on ISM. But we have a nice news week, so we're going to have more than enough to discuss. But you ought to be caught up for now and starting to get a news plan together. We'll have you solid by tomorrow to have Wednesday fully covered. Y'all stay there, and we'll have another great show coming up for you after this, and I will see you tomorrow right here on the Diagnostic Trading Hour. Thank you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.